Hello and welcome to today's More Reports on Monday the 6th of June with me, Richard, Pro Market Analyst at Antec Markets. We've got this sort of slight dollar retracement really in the opening trading moments of today, and this is basically come as we're seeing a retracement from that huge movement on Friday from the non-farm payrolls report, the big disappointment that we saw in the payrolls report that basically meant that the dollar got absolutely smashed to pieces. Treasury yields sharply lower. Look at that move on the 2-year. As expectations of a rate hike for June, July were drastically repriced. 10-year as well, sharply lower. And the dollar, generally, what a move that was. Dollar index, or trade-weighted dollar, on Friday. Basically, the market is sort of moved to now price out the potential for a June rate hike, now back down to 4%, having been up around sort of 35% previously. It's now down at 4%, and and July is even back down at sort of 30% as well. So it really has drastically changed the expectations of the market, this payrolls report, and the dollar's subsequently been smashed. However, what you do tend to find is when you get these big strong moves, you can often get a bit of a retracement, and that seems to be what we're seeing today. This retracement move, predominantly coming through on cable and dollar yen, and dollar yen rally, cable lower, but cable sharply lower as well on the back of a couple of Brexit polls at the weekend, which suggested that the Leave campaign are sort of beginning to possibly even gain traction and possibly move ahead. But obviously these are sort of one-off polls effectively, and it'll be interesting to see if they actually come into a bit of a trend increasingly. But just on a day-to-day basis, the polls tend to be very volatile on the Brexit debate, and create significant shifts in sentiment on sterling. So that is certainly driving sterling today. But dollar yen is also moving back towards the dollar once more, but only marginally. Look at it's in the context of that huge decline that we saw on Friday, not a great deal. So we've got Janet Yellen speaking today. Now, obviously, prior to that payrolls report, the market would have been thinking, well, is Janet Yellen going to pretty much all but confirm a rate hike in either June or July? Now it seems to be it's unlikely that that's going to be the case, although it would be very interesting to see what she does come out with today. But it just doesn't really seem that the Fed's going to be likely or possible that it could raise rates in the next sort of couple of meetings now. So that takes me onto my chart of the day, which is the euro yen. And euro yen had a big breakdown again on Friday, and this last 4 candles have been really strong move to the downside. Look at that, sort of finding the resistance of this big downtrend here, this sharper downtrend actually that is sharper than the big downtrend, which dates all the way back to Q4 2014 actually, and it's accelerating lower and breaking below support. I was sort of looking upon that 122 figure support area as being increasingly key, but it seems to have now decisively broken that, and I think rallies are a chance to sell on this. It has sort of changed the outlook. I thought that potentially this was going to be a bit of a consolidation period that possibly even turned into a recovery, but there's a big failure of that at the downtrend, and now 4 candles in a row, confirmed breakdown of the support, and I think rallies are a chance to sell. You've got the initial initial resistance of that old support between 21 sort of 50 area and 22 figure as your line of resistance, so you're banging that resistance now. But look at these momentum indicators; they're not even oversold anywhere near, are they? The RSI is just unwound, basically back to 40 today. MACD line's negative, stochastics negative. It just all suggests that any sort of rallies are still a chance to sell, and you've got to play with the trend. So you sort of wait for an next sell signal as you play it on a sort of near to medium term basis. And this is the unwinding move that we've seen today, and you're sort of back into the band of support around sort of 120, 150 towards 122. You'd say that the resistance around 2260 is sort of your key near term, because that is a bounce towards the end of last week before subsequently the sell-off resumed. So that is, I think, your initial line of key resistance. But to be honest, as this daily chart shows, you're not really in any sort of positive mindset until you break back above that June high, 24.20. So there is a bit of room for an unwinding move, but certainly I think the overhead supply of all this old congestion, I think it will provide too much, and subsequently you're going to see a retracement back, a sell-off back towards a retest of the 120.80 level. And to be honest, further weakness, because I think that if you go all the way back a few years, you could still see further declines. I don't really see any real reason why you're not going to see a further retracement. There's not a great deal of support back from 2012, really. The next key support comes into these lows here from sort of 2013, around 118, 119. So it could quite easily come back towards there, but certainly for now, this minor recovery that I think will ultimately be sold into. So I wish you good luck in your trading today, and I'll speak to you later.